we see oil prices remain, in a more reasonable price, this could be what we see to drive the next leg of the market, especially given that earnings overall have been pretty strong so far. Afternoon. We have a bit of a whirlwind of data there last week, and we are slowing down a little bit with a bit more of a focus towards jobs here this week. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered each week after we share some of these market news updates and trends that we're watching. And again, this week might be a little shorter given that the data is a little bit less intense this week compared to last, but I do want to spend quite a bit of time on jobs given that we did kick off jobs week this week, and back up maybe to Tuesday to kick us off here. So on Tuesday, we had job openings come out. We saw job openings out at 6.87 million. Not too much to digest here necessarily, kind of in line, I think generally slightly above expectations, if anything, but generally right in line with kind of where we've been and what the market had expected. On Wednesday, we also had the ADP employment report come out. This shows that we added 109,000 jobs. This was slightly higher than expectations. However, it's one data point, and obviously the employment report that we get tomorrow may either support that or go against that as well. So we really want to watch that number closely tomorrow. And then today we also had initial jobless claims come out at about 200,000, which was slightly lower than expected. So overall, I would say, more signs the labor market remains pretty resilient. But, coming up just tomorrow, we have the employment report and the unemployment rate. And those two are probably the bigger data points to watch during the jobs week. The Fed, as of late, has been focused more on the unemployment rate. Obviously, we will wait to hear or see what we hear from Warsh, as he looks likely will take that seat. But nonetheless, those two data points are really critical. And then we also have inflation coming in next week as well. So next week, quite a bit to cover with kind of rounding out the rest of the jobs reports and then inflation data as well. But before we break, I do want to spend some time, question of the week, really around Iran and where we're at in terms of some of those tensions between the US and Iran. This week, we actually have seen a big run in the markets based on some expectations that we may see some de-escalations overseas there. Now, today, it looks like that might be reversing course a little bit. So take this with a bit of a grain of salt. We've seen this story before, and whether it actually pans out, I think only time will tell. And I don't think it's going to be an immediate shift necessarily at this point, given how this has progressed so far. But nonetheless, generally, some signs of potential de-escalations overseas, which has led to a run in the market. But I think actually what is driving this, maybe more so than just the escalations or de-escalations in general, is that oil prices have dropped dramatically. So oil fell below $100 a barrel over the last few days or so. It's continued to decrease as time has gone on. Again, likely due to the expectations that things may be de-escalating. Again, whether that holds up, we will wait and see. But nonetheless, that is, I think, the big market mover this week, is that we've seen oil prices drop quite a bit, over the past couple of weeks here, and over the last week or so has only continued to do so. If we see oil prices remain, in a more reasonable price, this could be what we see to drive the next leg of the market, especially given that earnings overall have been pretty strong so far. So we talked about this a few weeks back, but oil prices are really the thing that we're watching closely to determine where stocks go from here, at least around some of the tensions in Iran, and certainly a good sign seeing this below $100 a barrel, and we want to watch that very closely to see if it kind of is able to sustain a lower price there. Hopefully that helps. Again, a bit shorter here this week, but be sure to tune in next Thursday. We will cover the employment rate, the employment report, the unemployment rate, and inflation all next week. In the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.